Welcome to Success Anthology, where we uncover the life journeys of those who've achieved extreme success. And we take a closer look at the life-defining moments that got them to where they are now, and the key lessons and principles they applied. We hope this video inspires you to take that leap of faith and encourages you to embark on your own journey towards extreme success. If you enjoy this video, please don't forget to drop a like, a comment, and subscribe to our channel for more stories of greatness. In today's episode, we'll be taking a closer look at the success story that is Ray Dalio, founder of Bridgewater Associates, one of the world's largest hedge funds. So, who is Ray Dalio, and what is his story? Ray was born in 1949 and grew up in a middle-class family in the Jackson Heights neighborhood of Queens, before moving to Manhasset at age 8. Ray was the only son of a jazz musician and a stay-at-home mum. He had a very close relationship with his mum as a child, until she passed away when he was just 19. Ray was less close to his father, who would work late in the week as a musician and use the weekends to catch up on rest. Ray has admitted on several occasions that he was a worse than ordinary student with a bad rote memory, a surprising revelation for someone who'd go on to become the world's most successful hedge fund manager. That being said, Ray has also described his younger self as curious, as someone who loved to figure things out for themselves, and as someone who was naturally inclined to take risks in search of reward. His entrepreneurial spirit was present at a young age, and starting at 8 years old, Ray had a newspaper route, shoveled snow from driveways in the winter months, caddied at the local golf club, waited tables and washed dishes at a local restaurant, and stocked shelves at the nearby department store. Clearly, Ray was focused on the pursuit of money at a young age. Ray's first interaction with the stock market emerged from his job as a caddy at the Links Golf Club, a club that was frequently visited by Richard Nixon, the Duke of Windsor, and many Wall Street investors during Ray's time working there. In the 60s, the stock market was booming, and regular Americans were making great money investing in stocks, which included those Ray caddied for at the club. This gave a 12-year-old Ray Dalio the inspiration to invest his caddying money straight into the market. Ray's first investment was Northeast Airlines, which he confesses was the only company he had heard of at the time, selling for less than $5 a share. Ray would end up tripling his initial investment of $300 in Northeast Airlines after they were acquired by another firm. After an initial dose of beginner's luck, Ray continuously expanded his investment portfolio, using the tear-out coupons from Fortune magazine to acquire the annual reports of various companies. As stated earlier, Ray struggled throughout school because of his disinterest in the subjects being taught, the monotony of lessons, and his poor rote memory. He ended up graduating from high school with a C average and went on to major in finance at his local college, C.W. Post of Long Island University, after getting in on probation. Despite graduating from high school with mediocre grades, Dalio's stock portfolio was far from mediocre, and upon graduation, his portfolio was worth several thousands of dollars. He achieved this by investing majority of his savings from his numerous jobs into investments he had both researched and heard tips on at the golf club. And by doing this from such a young age, Ray had the power of time in his hands. At college, Dalio transformed himself from a C-average student into a top achiever, which he credits to 3 things. 1. Learning about things he was genuinely interested in. 2. His newfound independence after moving away from home. And 3. Learning to meditate. The form of meditation that Ray took up in college was called Transcendental Meditation. Transcendental Meditation, which is a modern adaptation of an ancient Indian practice, is something Dalio continued to do throughout his life, and something which he believes has contributed massively towards his success, by enabling him to reach a calm state of open-mindedness, and thus allowing him to think more clearly and creatively. Dalio has engaged in this meditation for 5 decades, taking 20 minutes as soon as he wakes up, and 20 minutes before dinner to practice. Throughout college, Ray became fascinated by commodity futures, which are derivative contracts where a purchaser agrees to buy or sell a quantity of a physical commodity at a set price on a particular date in the future. Ray's interest in commodities stemmed from their low margin requirements, which meant he was able to leverage the little disposable income he had as a student to increase the size of his positions. This meant if he could make winning decisions consistently, he would then be able to borrow more to make more. Having transformed himself into a top academic achiever at college, Dalio was admitted to Harvard Business School to pursue his MBA. Prior to starting at Harvard, Ray spent his summer as a clerk on the New York Stock Exchange, which coincided with Nixon's decision to take the US off of the gold standard in response to rising inflation. This marked the end of the Bretton Woods Agreement, where the exchange rates of the world's major currencies had been fixed against the US dollar, and where gold served as the basis for the US dollar. The day after Nixon's announcement, stock prices surged by 33%, igniting a sustained period of inflation, and kickstarting a bullish run in the price of many commodities, a surge that would extend for decades. At the age of 26, after his first year at Harvard, Ray took a first stab at building his own commodities trading company with a group of friends. They called this company Bridgewater. As the firm started to grow, Dalio wrote a 100-page essay called Principles to socialize his unique management philosophy with his employees. Unfortunately, with the group lacking experience, the venture failed to generate meaningful returns and ultimately went on to fail. Dalio would later go on to restore the honor of the Bridgewater name by reusing it to build the world's largest hedge fund. After the initial launch of Bridgewater Associates failed, Dalio landed a job at small brokerage firm Shearson Hayden Stone that was led at the time by Sanford Weill, who would later forge Citigroup. However, his tenure at the firm didn't last long, after he was fired for punching his boss in the face and paying a stripper to undress in front of a crowd at a corporate convention. Dalio has since admitted that he regretted taking the job at Shearson Hayden Stone, with the firm's hierarchical structure reminding him of the constraints he struggled with throughout his pre-college education. Dalio appeared to thrive in a more freedom-based setup, and longed for an environment where he was free to express ideas irrespective of his position in the corporate hierarchy. He longed for a true idea meritocracy, where the best ideas would win, regardless of who or where they came from. This is something Dalio would later develop into a work principle, a principle that he would forge into the culture of his own firm. After being fired from Shearson Hayden Stone in 1975, Dalio reformed Bridgewater Associates out of his Manhattan apartment. Initially, the business focused solely on advising corporate clients on the management of domestic and international currency and interest rate risk. Bridgewater also began publishing a paid subscription research report called the Daily Observations. This model in itself was a success, and the company was able to move out of Ray's New York apartment to offices in Connecticut. Despite the value in Bridgewater's initial consultancy offerings, Bridgewater's credibility took a hit in August 1982 after Ray appeared publicly at Congress and on market news channels to declare that the US was headed towards a depression. Ray positioned himself according to his views, buying gold and T-bill futures as a spread against euro-dollar, which was a limited-risk way of betting on credit problems increasing. Unfortunately, Dalio's hypothesis did not materialize. Instead, the stock market embarked on a significant bull run, and the US economy would go on to enjoy the greatest non-inflationary growth period in its history, stretching 18 years. Being so wrong was extremely costly for Bridgewater, so much so that Dalio had to let every one of his employees go, and by the end of 1982, Bridgewater was once again a one-man outfit. Dalio was at a turning point here. Was he to put on a suit and tie and take a job on Wall Street, living a life he didn't want, and potentially accept being mediocre, or was he to dust himself off and persevere with Bridgewater? This was an incredibly tough decision for Dalio, given he had a wife and 2 children to support. Even after his crash, Dalio was fixated in chasing after the terrific life he dreamed of and was unable to accept anything less. Looking back on this period of his life, Ray recalls it as one of the best things that ever happened to him. He learned to be radically open-minded and became more open to the opinions of others. But most importantly, it set Ray on a mission to uncover how to pursue a high-return, low-risk strategy, which he would later label the holy grail of investing and the secret behind Bridgewater's success. After his crash, Ray was too broke to book flights to visit prospective clients, but over time, Bridgewater steadily began to scale up its client base, revenue, and build a new team. Ray would also begin to invest in computers, which he deemed as instrumental in helping him think. Through grueling effort and determination, Ray had survived his crash, and his persistence in building Bridgewater Associates into a success was beginning to pay off. Bridgewater was once again advising a client base filled with prominent names, such as McDonald's. McDonald's were on the verge of launching Chicken McNuggets, but were concerned the price of chicken might rise, forcing them to choose between raising their prices or having their margins squeezed. As there was no direct ability to hedge against future price rises, due to the absence of a chicken futures market, and with producers unwilling to sell at fixed prices as they too feared rising costs, it was up to Bridgewater, as a strategic market risk advisor, to envision a solution. Ray's holistic thinking shone through once more, breaking down the problem at hand into simple components. The Bridgewater view was that given a chicken is nothing more than the price of a chick, which is cheap, corn, and soy meal, the producer should only worry about volatility in the prices of corn and soy meal. And so, Ray suggested combining the two commodities into a synthetic future that would hedge the producer's exposure to price fluctuations, and enable them to quote McDonald's a fixed price. This cemented Bridgewater's credibility once again, and exemplified the company's out-of-the-box, radical thinking. Bridgewater's credibility was boosted even further when they turned a profit throughout the 1987 stock market crash, also referred to as Black Monday. Bridgewater Associates were one of very few investment managers who were short stocks ahead of the Black Monday crash, resulting in the firm being 22% up, whilst others were facing severe losses. Bridgewater's success in navigating the crash not only boosted their credibility on Wall Street, but exemplified the firm's capabilities beyond mere advisory services. It demonstrated they could be trusted to manage funds and realize healthy returns. It wasn't long after, when Bridgewater won their first major account, a $5 million bond account from the World Bank's pension fund. This marked a pivotal turning point for the firm. Bridgewater successfully managed the World Bank funds, and others took note, landing them Mobil Oil and other accounts within the same year. By the end of the 80s, Bridgewater was managing nearly $200 million in investments. Success from here on out appeared exponential, and in 1990, the firm landed their largest account yet, $100 million from Kodak's pension fund. The bespoke solutions Bridgewater Associates engineered for Kodak's pension fund would later become core to Bridgewater's unique way of managing money. The focus of the firm shifted towards creating a product that would package uncorrelated return streams, instead of focusing on managing investments in a single asset class. This approach famously became known as Bridgewater Associates, Pure Alpha, which, as the name suggests, aimed to deliver positive returns irrespective of market conditions. Later into the 90s, Bridgewater would become the largest currency manager in the world. The hedge fund giant capitalized on the unmanaged currency risk clients were exposed to through increased holdings in global bonds and equities, by releasing the first currency overlay for their investors. Bridgewater saw a substantial increase in assets under management coming into the 2000s. The firm continued to attract more institutional investors, including pension funds, endowments, and sovereign wealth funds. The firm's all-weather investment strategy, based on risk parity, gained prominence for offering consistent returns and low risk. The firm's flagship Pure Alpha fund continued to deliver impressive returns, strengthening Bridgewater's position as one of the world's leading hedge funds. Later into the 2000s, Bridgewater was able to successfully navigate the 2008 financial crisis, further cementing its reputation for risk management and strategic investment. Through rigorous analysis, Bridgewater was able to identify imbalances and vulnerabilities in the financial system, warning of excessive debt and risky financial practices making the economic system fragile. In anticipation of a downturn, Bridgewater began mitigating risk by hedging their investments and shifting to safer and more liquid assets. While many financial institutions faced catastrophic losses, Bridgewater's various funds showcased resilience. After successfully navigating the 2008 financial crisis, Bridgewater had an influx of new clients and capital to deploy. At this point, they had solidified their position as one of the world's leading hedge funds. Dalio was also entering his 60s, and as such, had begun taking steps towards a leadership transition, aiming to ensure the firm's longevity beyond his direct involvement. During this transition phase, efforts were made to ensure that Bridgewater's distinct culture of radical transparency and meritocracy persisted. the leadership transition was accompanied by internal challenges, including adapting to the new management style and organizational changes. Despite the internal changes, Bridgewater continued to be a dominant player in the hedge fund industry, managing significant assets and delivering performance. Even after stepping down as CEO in 2017, Dalio remained deeply involved with Bridgewater in an advisory role and continued to be a public face for the firm. So, now we have some background on Ray's incredible journey towards success. Let's delve into the underlying contributors which enabled Ray to achieve such incredible things. Number 1. Transcendental Meditation. Dalio has previously credited taking up Transcendental Meditation as the single most important reason for his success. He explains that Transcendental Meditation leads him to a state of open-mindedness and creativity, and enables him to slow things down so that he can act calmly, even in the face of chaos, an ability many would see as critical for someone working in the ever-changing financial markets. Not only did Dalio use meditation as a way to escape the stress of the markets, but he also applied the insights he gained from his study of meditation to understand the psychological factors that influence market decisions. Number 2. Dalio's Principles. The creation and application of Dalio's principles have acted as a rigid framework for his success. Early into his career, Dalio began working on a set of life and work principles as a way to channel his decision-making, and as a way to share his management philosophy with his employees. Dalio's principles focus on radical transparency, meritocracy, and systematic approaches to decision-making. By embracing reality, being open-minded, understanding and utilizing the different wiring of individuals, and approaching decisions and problems systematically, Dalio believes individuals and organizations can achieve their highest potential. These principles are the bedrock upon which Bridgewater Associates was built, and are credited for its exceptional success in the financial world. Number 3. Dalio's early exposure to investing. Ray's early exposure to investing, at age 12, was a huge contributor towards his success. This early exposure sparked Ray's initial interest in finance and investing, and would ultimately lead him down a career path centered around financial markets. Ray's job as a caddy at the Links Golf Club was fundamental in nurturing his early investing exposure, facilitating conversations with various Wall Street veterans and soaking up their insights. Number 4. Dalio's work ethic. Ray demonstrated a relentless work ethic from a young age, picking up various odd jobs to save money and allocate towards his investment journey. Dalio ultimately got used to working hard from a young age. This was also demonstrated in Dalio's college experience, where despite his poor rote memory, the freedom to focus on his preferred subjects, coupled with his high work ethic, would see him graduate with stellar grades and an opportunity to pursue his MBA at Harvard. Number 5. Ray's education. Ray's college degree and MBA from Harvard were instrumental in equipping him with solid foundations in business and finance, providing him with key connections and bolstering his resume. Before starting Bridgewater Associates, Ray held roles at the New York Stock Exchange, at Dominic & Dominic as the Director of Commodities, and at Shearson Hayden Stone as a futures broker and trader. These experiences were pivotal in providing Dalio insights into corporate management and the workings of financial markets. Ray's early experiences working as an employee were also key in winning over Bridgewater's initial clients. Bridgewater Associates began as an institutional investment advisory service, so many of Ray's initial clients were connections from his previous roles, who had previously benefited from Dalio's investment insights. Let's now summarize how Dalio's road to success can be used as a framework for your own journey. Finding a way to work meditation into your routine can be a great way to achieve mental clarity when decision-making. Developing a set of your own principles and using them as a framework to guide your decisions can be an effective way to achieve your goals and dreams. Dalio's early exposure to investing came by way of chance. However, if you're aware of an interest you may want to pursue, the earlier you can gain exposure, the better. This doesn't necessarily have to be direct exposure. Take Ray's introduction to financial markets as an example. It didn't come by spending time on a trading floor, but by working at the local golf club, caddying for investment professionals. The message here is to look for unique sources of exposure. Dalio, like others who've achieved extreme success, demonstrated a relentless work ethic throughout his career, which when channeled by his effective principles, helped him achieve incredible things. If you also want to achieve incredible things, you must accept that hard work and perseverance will inevitably be part of the journey. Finally, Dalio sought the education he needed to launch himself into the financial markets. Despite struggling throughout school, Dalio persisted and ended up thriving throughout college. Seek out the right education, whether that's formal or self-taught, keep learning, and build foundations of knowledge. Thank you for taking the time to watch this video. We hope it's given you a solid insight into the life of Ray Dalio and the journey he took to become one of the world's most successful hedge fund managers. Hopefully there's been lessons in this video that you can take away and apply to your own journey towards success. If you enjoyed this video, please leave a like and a comment and subscribe to our channel for more.